Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends and market movers. It's Friday, May 23rd. I'm Nelson John. From a sparkling surge in India's diamond dreams to a shake-up in the Sensex, it's a big day of bold moves and bets. ITC books a record-breaking profit thanks to a hotel exit, and Pharma rides high on margins despite a profit dip. Plus, Demerger doubles down on India. Let's dive into the business stories that are reshaping India's market momentum, one headline at a time. The Sensex is getting a makeover, and it's goodbye to Nestle and IndusInd Bank, hello to Trent and Bharat Electronics. Asia Index, the analytics arm of BSE, announced a reshuffle of the benchmark Sensex that takes effect on June 23rd. The Tata retail powerhouse, Trent and state-owned defense major, Bharat Electronics BEL, will replace FMCG giant Nestle India and private lender IndusInd Bank. It's a notable shift, highlighting the growing market heft of domestic consumption and defense-linked stocks over legacy FMCG and banking plays. The rejig doesn't stop there. In the BSE 100 index, Dixon Technologies, Coforge and Indus Towers joined the party, while Bharat Forge, Dabur India and Siemens bow out. Over in the Sensex 50, Indigo operator Interglobe Aviation and Shriram Finance are in, replacing Britannia and Hero Motocorp. And there's more shuffling in the Sensex Next 50 and BankX as well, with IDFC First Bank stepping in for Canara Bank. In more than index math, it's a reflection of shifting sectorial bets and rising stars in India's equity landscape. After years of bitter courtroom drama, the Lodha family feud has officially been laid to rest, at least on paper. Abhishek and Abhinandan Lodha have inked a legally binding, irrevocable settlement that ends their high-stakes dispute. But there's a catch. Any breach in this truce could cost 1 lakh rupees per day and reopen old legal wounds. For the next 5 years and 93 days, Abhinandan's business must clearly state they have no connection with the Lodha brand, a disclaimer that must appear on every brochure, website and ad. The deal also mandates email, domain and trademark changes. In fact, Abhinandan Ventures has already withdrawn its Lodha Ventures trademark application. Both parties are now barred from hiring each other's employees or sharing office spaces. Legal voices are calling it a model precedent for family business breakups, but there's still a cautionary note. Future disputes could arise if Abhinandan's ventures enter sectors linked to the Lodha legacy, says Mitakshara Goel of Swarniti Law. Bottom line, it's peace with a high-voltage penalty fuse. ITC just posted a blockbuster Q4 profit of 19,807 crore rupees. But there's a catch. This surge isn't from its core business, but thanks to a one-time windfall of 15,145 crore rupees from the demerger of its hotel business into ITC Hotels Limited. Strip that out, and the real net profit drops to 4,662 crore rupees, down from 5,190 crores last year. Revenue, however, impressed, rising 10% year-on-year to 20,376 crore rupees, beating street estimates. Cigarettes led the way with 9,228 crore rupees, while its non-tobacco FMCG business and agri segment also showed healthy growth. EBITDA grew 3.7% to 6,836 crore rupees, though margins dipped slightly. Shareholders have reasons to smile. ITC declared a final dividend of rupees 7.85 per share, bringing total FY25 payouts to 14.35 rupees per share. The record date is May 28th, and payments will be made by July end, pending AGM approval. As ITC sharpens its post-demerger focus, this quarter marks a structural pivot more than an earning high, steady in operations, strong in strategy. Pharma delivered a mixed bag this quarter, with profits falling but operations firing on most cylinders. India's top drug maker posted a 19% drop in Q4 profit to 2,154 crore rupees, hit by higher costs and muted US sales. But revenue rose 8% to 12,959 crore rupees and EBITDA jumped 22%, showing strong core performance. Margins expanded to 28.7%, up from 340 basis points, a sign of operational muscle. Indian formulation sales grew 13.6%, while global specialty drugs brought in $295 million, almost 20% of overall sales. US revenues dipped to 2.5%, but emerging markets and rest of the world showed modest gains. Chairman Dilip Sanghvi struck an optimistic tone, pointing to a promising pipeline of global specialty products like Lexelvi and Unloxit, thanks to their Checkpoint acquisition. R&D spend was also robust at 817 crore rupees. The board announced a final dividend of 5.5 rupees per share, taking the total FY25 payout to 16 rupees, up from 13.5 rupees last year. Despite the dip in profits, Sun's future looks brighter with a sharp focus on a specialty care and expanding global reach. India's love affair with diamonds is about to double down. De Beers Group Global CEO Al Cook, in his first visit to India, said the country's diamond market, currently under $10 billion, is set to double in 5 years, riding on strong domestic demand and a rising profile in global trade. India has already overtaken China to become our second largest market after the US, Cook said in Mumbai. He underscored India's central role, processing 90% of the world's diamonds, and revealed the company will open 4 new stores this year, to each in Mumbai and Delhi. Meanwhile, De Beers is ramping up marketing, tying up with retailers like Tanishq and trade bodies like GJEPC to push natural diamonds, especially as lab-grown ones gain popularity. But here's a twist. While lab-grown diamonds offer a cheaper, eco-friendly alternative, their prices have plunged 90%, prompting De Beers to shutter its Lightbox lab-grown diamonds jewelry line. Cook insists their future lies more in tech than tiaras. Talks with India's Commerce Minister and US-India trade discussions also hint at policy-level support for freer global diamond flow. This sparkling optimism comes from a report by Deepthi Sharma and Sunera Tandon. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.